Perfect entries and exits. How do you do it? How do you do it every single time to have a perfect entry and a perfect exit? That's what we're going to talk about in today's video. Got a question here I spotted on Facebook. I don't know how you all do it. I can never get the timing right and lose consistently, or I hold too long or sell too soon. This is what Julie wrote. So the thing is you got to switch your mindset when you're looking at trading. And this is one of the big issues that most people have when it comes to trading, being consistent, making money. One of the things that I chat about in my options black belt group, when I do mentoring and coaching, we talk about a few different things. Method and strategy. This is really what a lot of people do. They're like looking at really fine tuning their strategy and optimizing it. But then there's also money management and mindset. And one of the things here that we're lacking is the mindset and switching this perspective, because to get perfect timing and entries and exits, I mean, to have perfection, you have to buy at the lowest point. If we're talking about just buying and selling stock, you have to buy it at the utmost lows, which, you know, there can only be just a handful of people, and sell it at the utmost highs, right? So it's very rare and very difficult for you to even hit that. This is like trying to hit a lottery. Really what we need to look at is more appropriate money management, appropriate mindset of thinking, hey, we're never going to hit the lows. We're never going to have the timing perfectly and be right all the time. And what we need to really do is learn to manage that capital. So I'll show you this insight here as far as spreading money and capital. This is when we look at Bank of America, and I'm looking at, let's just say, in this case, just selling puts, which is acquiring. If you don't know what that means, it means acquiring shares if the stock drops at lower levels. And here what I have is just spreading capital. Now, this trade was put on 7/18, 2024. Then you have other trades like this one was 7/22. Then we might have another one, 7/19. So different trades are put on at different times, spreading out capital, as well as on different strikes, as well as on different dates. So there's a lot of variations in those trades, because I really don't know exactly where the low of this stock's going to be. And if you're buying a single call option, let's just take a look at here, Uber. If we're buying a single call option, what a lot of people will do is they will concentrate the risk kind of right here. Let's say, hey, I want the 68 or I want the 73. They will pick one of those and they'll buy like their 5 contracts, rather than spreading their money and capital into let's just look at something like this, where we go in and we might buy if we're buying single option, something that's 20 days out, and then we'll do like a 50 delta. I might do something, let's say 30 days out, and do like a 70 delta. Okay. And maybe even a 60 days out. And that could be, maybe a 30 delta. So you could have different variations of positions, and now you could do 3 contracts in each. And that could give you like 9 contracts total, because each one will move and behave a little different, and maybe do it on different days and different time frames and so on. So this is really where it shifts from, hey, I want to do all the risk at one time in one spot in one area, whereas a lot of other people, when we look at a professional level, we look to spread risk and capital and have appropriate money management, right? Just like in the same way you wouldn't buy a stock all in one spot, or buy 99% of your money in one position. It's no different. When you're looking at perfect timing to try and get timing correct, then in this case, you're looking at concentrating the risk in one spot in one time frame. And usually just does not work out, because for you to hit that is it's very rare, unlikely, and you're going to be always disappointed and unhappy. So understand that the objective and goal is really to learn to spread money, spread capital, spread risk. And when you do that and you do it effectively, you'll get decent results, and your account will grow. So that's really the objective. So anyways, I hope that helps and shifts your kind of mentality and mindset. I mean, this is really what you want to look for is beyond just the strategy here. We want to think about the mindset that's appropriate and the money management side, because if you are missing those things, then it'll be a bit of a struggle. So thanks for joining me. Hope that helps. Maybe I'll see you in another workshop that I do, group coaching or mentoring one-on-one. So anyways, thanks again, and I will see you next time. Take care.